Okay, so in the world of global equity crowdfunding, we have more access to private deals than ever before, right? But here's the thing, there's a huge problem. We're seeing this massive gap between people who are interested in investing and the ones who actually pull the trigger and commit. So in this explainer, we're gonna figure out why, and we're gonna crack that conversion code.
I mean, just let that sink in for a second. For every 10 people who show real, genuine intent to invest, they get all the way to that final step, 9 of them just vanish. This isn't some small leak in the bucket, it's a floodgate. It's a huge structural problem that has platforms and founders all over the world scratching their heads. So what is really going on here?
Well, there's actually a name for this. Industry experts call it the conversion gap. And honestly, it's the #1 challenge we're looking at today. It's that giant drop-off between all the online traffic and the money that actually gets invested. And look, solving it isn't about some single simple fix. It's really about unlocking 3 critical keys. Let's dive into the first one, which is maybe the most fundamental of them all.
To solve this whole thing, we've got to unlock 3 keys. And the very first one is what we're calling the cultural code. Because here's the deal, investing isn't some universal language. It is deeply, deeply cultural. So before you can even think about marketing funnels or data analytics, you have to understand the actual human being on the other side of that screen and where they come from. It completely changes the game.
And this, right here, is the core truth you have to accept. If you're building a fundraising campaign for some generic, global investor, you're basically building it for no one. A one-size-fits-all approach is pretty much guaranteed to fail, because everything, from risk tolerance to what people even think is a good opportunity, it all varies dramatically from one country to the next.
And this is where that cultural divide becomes just crystal clear. So let's take Italy, for example. Marketing strategist Claudio Grimaldi points out that Italian investors are often incredibly cautious. A lot of them might only invest once or twice in their entire lifetime. Now contrast that with the US, where growth strategist Jason Fishman sees retail investors acting almost like pros. They're following specific founders, they're talking about CEOs by their first name. I mean, these are 2 completely different worlds.
And yeah, the hard data absolutely backs this up. In Italy, a staggering 90% of retail investors will only make 1 or 2 investments, ever. Just think about what that means for your strategy. You can't build a business model that relies on repeat customers. You have to win over a brand new investor, totally from scratch, pretty much every single time.
Okay, so if culture is the landscape, then our second key, the data map, is how you navigate it. Once you accept that not all investors are going to behave the same way, you can start using data to find those specific signals. The little digital breadcrumbs that show you not just who is interested, but why they are, and exactly how close they are to making a move.
Jason Fishman, the growth strategist we mentioned, he visualizes this journey as a classic marketing funnel. You start out really wide, with awareness, and then you narrow it down to consideration and intent. But that last critical step, getting from intent to conversion, that's the huge chasm where 9 out of 10 investors just fall off. The right data can build a bridge across it.
So, this means we're looking way beyond simple clicks and page views. We're tracking behavioral signals. Did someone move from the main offering page to the actual checkout? Did they open 3 of your emails? Did they register for a webinar? See, every single one of those actions is a signal of deepening interest. This is how you stop drowning in noise and start using data as a powerful predictive tool.
All right, so you can have the perfect cultural strategy and the most precise data map in the world, but they will totally fail without our third and final key, the trust engine. See, data and culture can get an investor right up to the edge of the finish line, but it's trust, that's the human fuel that's required to actually get them across it. Sarah Hardwick, a marketing strategist who helped raise an incredible $140 million for Aptar Motors, she just nails this concept. She warns against this tendency to only show the good stuff, to sugarcoat the startup journey. Real trust, she says, is built by being radically honest about the whole thing. The wins for sure, but also the struggles. Authenticity is your real currency here. And this is exactly why founder visibility is absolutely non-negotiable. Retail investors are not just investing in a slick business plan, they're investing in people. Jason Fishman even says a campaign with no pictures of the founders is an immediate red flag for him. And it makes sense, right? If you can't see the captain who's steering the ship, you're probably not going to get on board.
And if you're sitting there wondering about the ROI on all this trust-building stuff, well, here you go. Fishman has seen a single, well-run educational webinar where the founders just get on and connect with their community, bring in over $1 million.
in just 24 hours. That right there is the direct financial power of real human connection.
But, and this is a big but, there's a critical catch. Crowdfunding strategist Scott McIntyre gives a pretty stark warning here. Building trust takes more than just saying you're transparent. If there's no real enforcement, no real accountability, then transparency is just a marketing buzzword.
So we've got our 3 keys: culture, data, and trust. But how do we actually put this code to work? Well, it turns out cracking the conversion code isn't about finding some single secret trick. It's about building a disciplined system that weaves all 3 of these elements into one single, powerful strategy. The solution really comes down to a series of strategic shifts. It means designing your campaign differently for one-time investors versus those serial backers. It means treating your founder's communication not as some task you have to check off, but as a core asset. It's about simplifying complexity, proving the ROI of education, and using universal values, like sustainability, to build bridges across borders.
And looking ahead, yeah, technology is going to play a huge role. But the experts advise using AI not to replace that human connection, but to enhance it. To actually listen to what investors are saying and feeling. And things like the development of secondary markets, that could ease one of the biggest investor fears out there, being stuck with an illiquid asset for years and years.
And that really brings us to our final question. As technology gets smarter and our data gets more and more powerful, is the secret to converting investors going to lie in perfectly optimized algorithms? Or will it always come down to the fundamental, totally irreplaceable power of human trust and authenticity? I think that's the code we'll all be trying to crack.